Great. So if you look at that question, that is question number 1A. It is a question from topic number 2. So number 2, we are talking about costing terms and concept. And in that part, we also look at what we call cost classification. Costs are normally classified, that's number 2. Costs are normally classified based on so many categories. The first category of classifying costs is based on time. So we can classify cost based on time. Number 2, we can classify costs based on behavior or based on behavior. We can classify cost based on function. We can classify cost based on nature, right? We can classify cost based on nature. So if you're told to maybe explain 3 categories of cost classification, now we have more than 3. In that question, we were given 4 of them, right? We have more than 3. If you're told to do or give us cost classification categories, you actually have more than 3. So you can manage that. Now, what do they want specifically in that question? Now, the cost classification is essential for easier cost ascertainment and cost control. With reference to the above statement, can you explain the following basis of cost classification, citing one example in each case? If you are to classify cost based on time, are you able to give us examples of cost under category or under that classification based on time? If you are to classify cost based on behavior, right? Based on behavior, variability, based on function. If you are to classify cost based on all that, are you able to give us examples? So behavior, of course, now that's what we want to talk about, variability, the variable cost, the fixed cost, the semi-variable cost, step-up cost, and all that. Are you able to give us that? Somebody? Yes, examples. So let's start with the time. If you are to classify cost based on time, historical cost, labor, no, labor is not under cost classification based on time. So we have historical cost, we have future cost, by time predetermined cost, okay, that is what we have there. Then the next thing, we are told to look at cost here. I need to bring some few things to... Good. So that is cost classification based on time. That is historical cost, and then we have future cost. Let's go to behavior. If you are to classify cost based on behavior, are you able to give example? Classification of cost based on behavior. Classification of cost based on behavior. So we have variable cost. We have fixed cost. We have semi-variable. We have semi-fixed, or what we call step-up cost. Or step-up cost. Good. That is what we have there. Now, just as a matter of confirming some few things here, let's see what you can do about it. Good. That is what we have. Then the next one, can you now classify cost based on function? If you are to classify your cost based on function, classification of cost based on function. There are so many. Admin cost, finance cost, selling and distribution cost, production cost, prime cost, all those ones, right? So those are some of the classification of cost based on function. Can you give us the examples of costs based on nature? Classification of cost based on nature. Classification of costs based on nature. Classification of costs based on nature. Classification of cost based on nature. So we have material cost. We have material cost. We have overhead. What else do we have there? We have overheads. Okay. So classification of cost based on nature, we can talk about, or these costs are classified by their inherent nature or type of expenditure. Some of the examples of this classification helps in understanding the type of cost and its impact on the financial statements. Of course, one of the examples is material cost associated with raw material used in production. Then, of course, and labor cost, wages and salaries paid to the employees. That's why we talk about now the classification of cost based on nature. That is what you are given in that particular question. Good. The next part, that is question number 1A. Let's just move down here. Any other part that we have a theory question? Good. Question number 2A. Describe 3 roles of management accounting in an organization. So you can fail every other question. You can forget about all the formulas, but you can't forget about management accounting, the role of management accounting in an organization. I want you to think from this direction. Number 1, when we're doing topic number 3, the topic number 3 is called cost estimation. Topic number 4, cost accumulation. Topic number 5, activity-based costing. Topic number 6, product costing. Topic number 7, marginal and absorption costing. Number 8, break-even point analysis. Number 9, budgetary control. Number 10, standard costing and variances. The question is, how are these topics important to an organization? That is why if you could have done that question at the introduction part, you could not understand what it meant. But at this point, can you tell us how the concept you learned in topic number 7 will be important to an organization? How the concept we learned in topic number 3, cost estimation, will be used by an organization to make, to perform the activities and even have their final objective, which is, of course, getting profit. So the question is, how are the 9 topics that we discussed useful to an organization? So you don't have to go through so many books, so many notes. No, just take it from that direction. So I want to see your points down there. Point number 1. Point number 1, aid in budgeting and forecasting. Of course, that is only learned in management accounting, as per what you can say there. Planning and budgeting, support decision making, right? Setting of prices, especially when you get to topic number 8, the intended profit. So how much should we charge? Like our yesterday's question, how much should we charge for us to be able to get the intended profit? That's a concept under topic number 8. Communication. Help maximization of production capacity or effective utilization of the limited resources. A concept from topic number 8 by studying what we call the limiting factor analysis, performance measurement. So that is basically what you are required to do there. So you can just maybe do a list and then you look at it later. Budgeting and financial planning, cost control and management, specifically on topic number 3. Even cost accumulation, you'll be able to know all the costs associated with the intended business that you want to actually bring up. Decision-making support, of course, we talked about that. How many units should we sell to break even? Which market should we serve? How should we use the limited resource? All right. Financial reporting and analysis. Remember the income statement as per absorption costing. The income statement as per marginal costing. Put even that aside. Go to topic number 4. Remember the store ledger account, where we are getting the closing value. I mean, the value of closing inventory using FIFO, using LIFO, using weighted average method. So which one is normally picked and transferred when doing what we call financial reporting? Valuation of inventory, a concept being covered in management accounting. Strategic planning and control. When you get to advanced management accounting, now that we are not coming back for this unit, I hope the 74 of us in this meeting, none of us has got some hopes of coming back to do management accounting next semester or next month. Right? All of us are ready for advanced level. So as you get back or you now move to advanced level, topic number 5 of advanced management accounting is called performance measurement, where we are going to look at the balance scorecard. In the entire organization, every department is very important, right? Every department is very important. Every sector within the organization. We want to look at how employees are actually satisfied within the organization. Are their needs taken care of by the employer? We want to know how the customers are actually effectively served by the staff of this particular organization. So again, the customer part of it. Then you want to see how the business is fighting to be relevant for the next 10, for the next 15 years. That is now the innovation. Then as the company does this, remember, there are those people who have invested their money in this organization. So there must be the profit part of it. So all that put together will enable the company to move forward, right? Will enable the organization to move forward. So the strategic planning and control concept now comes to that particular section. Let's look at question number 3. Management accounting is a discipline that communicates economic information to various parties known as end users. With reference to the above statements, can you outline 2 user information needs of the following end users? The executives. What are some of the informations that executive needs to be able or gets from management accounting reports? Executives, outline 2 user information needs by the following end users. So executive, those are the people who now comes up with a strategic plan. In the next 5 years, where do you want RCM to be? In the next 5 years, where do you want CASNEM to be? Right? So that information, for the company to make that decision or actually be strategic, it has to get some information. That's what we need. Number 1. What do they need? I think we are missing something. Let's see. We also have production management. Then, of course, we have management accountants. So production managers and then management accountants. Maybe I can give you an hint. Now, the executives, number 1, there's what we call strategic insights. The strategic insights here, the executive needs high-level information that aids in strategic decision making, such as profitability analysis, market trends, and long-term financial projections, right? Remember, we are getting to a point whereby somebody is working getting to work very early in the morning. Someone is coming back from work very late at night. They are not able to attend the 6 p.m. class, right? Or initially, right? So RCM 4 years ago, four years ago, we were telling you that you must just attend the live class. If you miss the live class, then that is it. You could not follow what you've actually missed. Then, of course, now the executive sat down and said, what are we going to do? Because we are getting to a point whereby the employment environment is very harsh, and you find that people are working very early in the morning, or from very early in the morning all the way to late in the evening. They cannot be able to manage the 6 p.m. class. What do we do? Then now the executive came up with what we call, did their research and all that, and of course they came up with LMS. So this LMS, number one, it is allowing you to log into the student portal at any given time. So long as you have internet connection and you have been given access to a unit, what happens? You can even study at night. You can even study at 4 a.m. Everyone is sleeping, including the executive themselves, but you as a student, you are going to LMS and doing your studies, right? Number two, you add issues of having a lot of chats in the group. So anytime the link for the meeting is sent there, you could not actually trace that link. Anytime a communication is done, you could not be able to trace the information. So you are missing a lot, right? Another thing, every time a student was admitted to the group, we had to reshare the notes that have been shared from day one, right? So you're having a lot of chats in the group, and even it led to some people missing important information, even missing classes at some point. So what did we do? With this portal, we were able to put all the notes there, right? So anytime someone is admitted, they are able to the class, they are able to get the information that has been there from when they were not in the class. So it has saved us, reduced the number of chats, even the Zoom links are accessed from LMS. That is now a long-term solution. That, of course, was brought in by the executive. Good. So the performance metrics. So they require reports on overall organization performance, including key performance indicators and financial health, guide strategic planning and corporate strategy. You can also recall that at some point, one point in time, RCM was charging the tuition fee. It was around 3,000. It was 3,000 per unit. So look at where we are. We are now at 4,800. Possibly by the end of this year, of course, it might get to 5,000 or even 5,200. You can get that. So again, as you offer the services, the hosting costs and all that, of course, then the fee has to do what? To increase to be able to maintain such kind of systems. So that's what we have there. Then production managers. I wanted to pick it from the functional budget that we did yesterday. Look at the functional budget. What was our starting point, right? Where did we end at? The procurement of the purchases. What, again, did we do beyond that? The income statement. So production managers are in between. What do they need? Number one, they need to know what is supposed to be produced. Number two, as they get raw material being purchased by the procurement department, then the quality must be taken care of. So please just mention something that the production managers will need. Production managers, cost control data, right? Good. Now, as they do the production, remember the production department is where you'll find some people, they are just there by appearance. They are not doing the production. There's a lot of defective products, right? So what do? Can we get just few people who are extremely skilled, who are used to this particular job, so that we can minimize wastages in terms of unnecessary mistakes that will be done by those who are doing it for the first time, right? So we have efficient or effectively trained personnel. Then, of course, operational efficiency metrics. If it is the machine that you're using that is taking us backwards, what do we need to do? We need to get a modern machine, right? We need to get a modern machine. Of course, you can also see, for example, we can even give that example. At some point, you're able to see our whiteboard was bringing a lot of issues. All the time, the board is not clear, the board is not visible, we can't see the board, right? So what happened? Of course, now to enhance that, which is the actual production part, right? What happens? So there is now a modern screen that is automated, a modern screen, right? Which will show you everything clearly with the regulated lighting. So you not say, the board is not clear. Like now, if you have to compare what I'm sharing with the board, then of course, majority will say, no, please, let's just proceed with sharing the screen, right? But again, as we also bring the technology, you must understand that there are those people who are not conversant with this. So what kind of training are you putting into place to enable people actually do the right thing? That is why I told you that as you get to do your business data analytics, you need Excel knowledge. So there's no need of waiting until you get to BDA. That is when you start looking for Excel. And we said, so during the holiday, once you're done with your exams, you can do the training in advanced Excel or any other short course. As you get that knowledge, by the time you'll be getting to BDA, you will be an expert in using Excel to do your work and all that. And it will be advantageous to you. So what are we doing? What are the trainings we are doing to prepare you for the final thing, right? That is what we have now. Then accountant, management accountant. Management accountant. We talked about cost accumulation. Who does that? The management accountant will help us to understand. At the end of the day, this product should be costed at this particular amount, right? Even, of course, even the intentions of increasing the school fees, maybe if that is in place, the enhanced services, so you now have a clear board, you now have a stable LMS, you can now take your cards through LMS, you can now get your notes and all that through LMS. What happens? You have additional costs that have been actually incurred. So what happens? How is that financed? Maybe by increasing fees by either 5% or even some 10%, or even just seeing what to do within the system to be able to finance the additional cost. So the management accountant now needs that kind of information to be able to do the effective costing and arrive at the selling price. So if maybe the management accountant advises RCM that, what, from next semester, we need to have maybe increased fees, then that is what we'll now talk about. Right? The next thing, financial performance data. Of course, they require detailed financial data for preparing internal reports, conducting performance evaluations, and providing insights into financial performance for decision making. Now, example of that is this one here. We have to do these things practically. So it will allow me to display that. It will allow me to display that. And you have to give me one person who was to be sponsored for Excel. It seems it is not working. If you look at what I have here, let me just share my screen. This is what we have. So now the management accountant will get information like this one here. This is what we have. Look at how the data is. This data is not complete, right? We have the information about the suppliers. We have the category. We have the product group. We have product ID and all that. So you can see whoever is doing sales at the counter, whoever is taking care of the goods in the store warehouse, is not concerned about total cost. Is not concerned about total discount. Is not concerned about total revenue or even the net profit. So once this information is collected from the sales point, it is now the duty of the management accountant to now go ahead and get total cost, total discount, and see how is this discount affecting either positively or negatively the purchasing interest for the customers. How is it interfering with the total revenue of the company? This net profit cumulatively, how are these expenses? Which expense is having the biggest percentage of our total revenue? Then they'll be able to advise, you know what, we are incurring a lot of cost in dealing or in hosting our videos in Vimeo, the platform. So what happens? Should we stop giving videos to the students through LMS? And if that is stopped, how will it affect our sales? Something of that kind. So that is one of the examples of the information provided by that is being used by the accountant to now give informed or effective information needed by even the executive or even production department to be able to make informed decisions. Great. Then the next thing, so management accountants will give us some few things. The financial performance data, of course, we talked about that. Then the next thing that was done is question number 4. Another theory question. Question number 4. Summarize 4 features of process costing. So we did process costing, I think yesterday we did something there. And of course, during our normal class discussion, the process costing was also covered. So can you give us the summarize 4 features of process costing? 4 features of process costing. And as we do that, I want to just show you something. That's why I told you the 100 pages document will be very, very important. Should be very, very important to all of us. That is question number 4. And I want to take you again to question number, I want to take you to CPA December 2022, CPA December 2022, 2022 December, still management accounting. And you can see how they are related. We had a similar question. Yeah. So look at question number 5 of December. We are actually answering 2 questions at the same time. Question number 5A, summarize 4 silent features of process costing systems. Of course, not the costing system. Then here, summarize 4 features of process costing. So almost related, right? Now, can somebody give us the answer? At least 2 will be okay for us. At least two. Number 1. So the cost averaging, if you are going to produce 10,000 units, it is done under the assumption that all the 10,000 units will have the same cost. All the 10,000 units will have the same cost. That is basically cost averaging. Cost accumulation by process. Remember what you are saying on the debit side, total cost of input. Total cost of input will help us to get the total cost of output, which is distributed, number 1, the closing work in progress, right? The closing work in progress, the abnormal loss or gain, something of that kind, all that put together. Then, of course, equivalent unit calculation. Remember the FIFO method? The FIFO method, we said that, yes, it is not actually that the opening work in progress was fully completed in the current year at 100% for every single element. No, already raw material was provided in the last period. So the only thing we are going to bring in is the labor and the production overheads. So we bring in the equivalent units. That's also one of the features of that. So equivalent unit calculation. Then work in progress, of course, it is considered. Yes, we engage our staff to do production, but due to time or some other factors, we could not proceed beyond that time. So what happened? We stopped production at some point. It was not fully converted to a finished product. It is referred to as work in progress. So the work in progress management is another feature. The opening work in progress and the closing work in progress. Continuous production flow. So you are told the output of process 1 becomes the input of process 2, right? Then the input of process 2 or the output of process 2 becomes the input of process 3. The final output of process 3 is the final or finished product. So continuous production flow process costing is suited for industries with continuous production flows where the production process does not have distinct start or end points. Yeah, that is what we have. That is what we have with regards to the April 2024 sitting. I think that is the last one. Yeah. No, we have another one. Question number 5. Question number 5B, Roman 1. So a flexible budget is known to be more appropriate for control purposes than a fixed budget. Compare flexible budget. So flexible budget or a flexed budget is adjusted to give you equivalent cost if the budget was to be made at the actual activity level. Remember the flexing of budget? We did it in topic number 9 when we came up with the flexed budget. We did it in topic number 10. Remember what you are telling us, that material usage variance is equal to standard quantity in actual production. That was one of the applications of flexed budget. It is better than a fixed budget. A fixed one is not adjusting the quantity to the equivalent actual production, right? So what are we being told? By distinguishing between a fixed budget and a flexible budget, explain whether you agree or disagree with the above statement. What is that above statement? A flexible budget is known to be more appropriate for control purposes than a fixed budget. So we can agree. Of course, you are given an open end to either agree or disagree with that statement. So let's start with the first part. Can you distinguish between fixed budget and flexed budget? Anytime you are told to distinguish between item A and B, the first thing, start with the definition. That is a distinction, right? If you define the two items you are given there, already you've been able to give us the first difference. Then maybe you look at how they are used. Then you tell us why you think that this other one is more advantageous than the other. So let's start with the definition. Maybe somebody can give us what is a flexible budget, what is a fixed budget. What is a flexible budget, what is a fixed budget? Somebody. These are now the low-hanging fruits in topic number 9 under budgetary control. A fixed budget does not change with change in activity level. It is basically a constant budget. That's great. What about flexible budget? flexible. If fixed budget does not change with the change in activity level, is a flexible budget doing the reverse or the opposite? Of course, don't tell us that and vice versa, that fixed budget does not change in activity level and vice versa. No. You have to write something. What is that vice versa? So flexible adjust based on the activity. Flexed makes the adjustments on the actual costs, or it is adjusted based on the actual activity, the equivalent budget to the actual result. Thank you. So agreeing with the statement, those who are agreeing with the statement, or the first part, you agree with the statement. What will be your reasons? Number one, flexibility in control. So once that is there, even if you get actual production that is far much way below the intended or budgeted production, you are able to adjust effectively and know whether the budget was achieved or not. All right? It allows for comparison. Remember the real variances you are getting, you are to flex first. So after flexing, you are now comparing the flexed budget with the actual results. The difference between them was giving you now the real variance. Thank you. That is what we have there. So we are agreeing with it. Then I think I have part, is it part 2? Outline 3 benefits of budgetary control system in an organization. The budgetary control system. Budgetary control system. Note that you wake up in the morning and say, today we want to buy 10 computers. Then someone goes and brings the 10 computers. Then you wake up again another day, you say, today we want to sponsor 90 students. Then someone just wakes up and puts them into the system without paying any fee, right? Something of that kind. There must be a prior plan, right? And there must be, of course, effective research on how such actions will affect the customer's view of the organization. How will it affect maybe the performance of the internal staff, the first client of the company, that is staff, right? How will it affect the investors? How will it affect even the entire economy? Good. So the budget advantages. In other words, what are the advantages of having a budgeting system in place? Even at an individual level, do you just wake up and start buying things, or you have to plan? Say, okay, this one here, yes, I need it, but this can wait. I need these 3 items, but out of the 3, it seems this one is the first one to be given a priority. We can't go without it, so let's deal with this one first. Else, in resource allocation, establishes a system of control. So with the budget, we'll be able to know, we plan to spend this. Did we spend that money? What happened to the budgeted amount? What happened to the assigned people that were to do this and this as per our budget? All right. Performance evaluation. If we budgeted to do all these things and we assigned people, did they manage to do that? Definitely yes. That's where we now come to the performance evaluation. All right. Did they actually meet the target? Because that target is already part of the budget. So informed decision-making, enhanced financial control, performance evaluation, improved planning and coordination. With the budget, everyone knows what they're supposed to do. Resource optimization, the limiting factor analysis. You are doing that in advance. The company has allocated 50,000 labor hours. How will we use the limited 50,000 labor hours to maximize on the returns for this particular company? You are coming up with a budget in advance, monitoring the flow. It can also help in training. Everything has been given in place, and therefore there's that effective system of doing things. So you can even use that to do what? To do your trainings. I think that is what we have for that. Yeah. can we move with speed and look at August 2024? August 2024. August 2024, CPA 2024. CPA 2024, question number 1. I hope you are following what is happening. CPA 2024, question number 1. CPA 2024, question number 1. We are being told here, number 1A, with reference to cost classification, right? You can recall that. Distinguish between the following types of costs: semi-variable costs and semi-fixed costs. Semi-variable cost and semi-fixed costs. Somebody? Semi-variable costs and semi-fixed costs. Somebody to do something. Semi-variable as both fixed and variable. The semi-fixed contains components of both fixed and variable. Okay. That's according to our friend there. Semi-variable as fixed cost, which remains constant, as the variable cost changes with the changes in production. Semi-variable is partially contains both fixed and variable, where the fixed remains unchanged regardless of the output, while the variable changes according to the consumption. Okay. How about semi-fixed? Semi-fixed, what do we have with regards to semi-fixed? Semi-fixed. Remains fixed up to a certain threshold, which are constant within a certain production band, but eventually increases at the same critical point or at some critical point by a constant amount to another fixed level. Actually, in other words, remember the step-up cost. So that can effectively describe what we call the step-up cost. So semi-variable cost, these are costs that consist of both fixed and variable component, then of the semi-fixed, also known as the step-fixed cost. These costs are or remain constant with a certain range of activity, but can change if the activity level exceeds a specified threshold. For example, I want you to help me understand, will this be semi-variable or semi-fixed? So for a Zoom account, let's say like our class here, in 2023, we had a maximum of 70 students, right? We had a maximum of 70 students in management accounting, a class like this one of yours, 3 years ago, 2023. Now, at that particular point, we had a Zoom account, the same Zoom account. So we took a subscription where we were to hold a meeting of 1 to 100 students. That account or subscription would accommodate 1 to 100 students. So even if our students were to increase from 70 to 92, will we incur additional costs with regards to the Zoom subscription? Our package was to cover one student to 100. So you can see when the student increases from 70 to 92, there's an increase in revenue. But now the Zoom account here, there's no additional cost because we already have a subscription of covering 1 to 100 students. Good. Now, the same Zoom account, the students now increased beyond 100, right? So let's say the students have increased to 150. What happens? We'll incur additional cost. So if I want now, it means we have to go to a license that accommodates now more than 100, but to a maximum of 500 students. You get me? More than 100, but to a maximum of 500 students. So currently, let's say we have 320 students in management accounting, right? 320 students in management accounting. Actually, that is the only evening class. We've not included the morning class. Now, the management accounting students who are 320 in class, we have decided that maybe something happens, and then we now have the students increasing to around 450. Will we incur additional cost? We will not incur additional cost because already our current license is covering students that are at least above 100, but less than or equal to 500. So in such a case, which type of cost is that? Is it semi-variable or semi-fixed? Is it semi-variable or semi-fixed? That will be semi-fixed, the step-up cost. The step-up cost. So this is what we mean. I hope you'll be able to see my board. Let's try. Let's try and see the board. Confirm if the board is visible from your side. And I hope so. So this is what we have. We are talking about these types of costs. These types of costs. We can have the two of them here. Then we have another here. So this is a number of students, number of NA students, right? Number of NA students, great. That is what we have. So when you now get to this part, we have a Zoom subscription. Let's say that is what we have. And something else that will come in. So the Zoom subscription tells us the moment we admit one student to 100, the cost will be 10,000. So if you take a package where we are admitting the one student, of course, can start from all the way to 100, all the way to 100 students here, what happens? The cost will be 10,000. Should the student increase by just one, imagine we are adding one. So look at the disadvantage now. If the cost increases for us to be able to accommodate 101 students, the number is increasing by, oh, let me drop the screen. Sorry. I think I've done that. You are now able to see the board. I hope you are now able to see the board. Thank you. Now, not yet. Not yet. How about now? How about now? Won't change. Let me just see what to do here. That is not take the most right. Good. Yes. Thank you. Is it okay now? Confirm that. No sound. So we have to go for a license that will accommodate. I hope it is okay. Confirm the sound. Is it okay? Thank you. Now, we have to go for a license that will now accommodate the next 101 all the way to 500. That additional license will cost the company a total of now, let's say, 15,000, right? So we are going to increase students to about 300. Let's say we have 100, 200, 300, 400, 500. So what is happening? You can see we started from this point. What happens? The moment the student increases above 100, this cost will increase, right? To increase vertically. It goes all the way to where we have 500 students. The moment the license goes beyond 500, it again goes up, right? It again goes up. So this change is a vertical change. It's a vertical. That now we call the step up. The step up. Or what we call the semi-fixed cost. That's what we call the semi-fixed cost. Then the next part, we are now looking at this point. Initially, at the beginning, what happens? We are going to incur, so let's say in terms of training, so let's say we need a studio. So this studio, the company, because let's say we have a studio here, so we need a studio. Right? With the studio, we also need, of course, the computers and all that. So computers, that's a one-time cost. Computers, right? Computers. All these put together, the company will incur a cost of, let's say, 250,000. The company will incur a cost of 250,000. Now, from there, so we already have 250,000 being incurred here. 250,000 being incurred. You've not served even a single student. You've paid the lease rentals. You've not incurred, you've not even admitted even a single student. As you bring the students, you now bring in maybe the training fee. As the number of students increases, right, the first part, we are not incurring, or we are not even being able to bring in a single student. That is the first part. That is a fixed cost. Whether you have students or not, whether you have one, whether you have two, whether you have 500, that will not be affected, right? Good. Then we now move forward. You will get to a point whereby, as you now start paying students, we have now the training fee. The training fee depends on the number of students. Let's say we are talking about maybe 2,000 per hour, 2,000 per hour. So, per student, let's say 2,000 per student. So, as the number of students increases, this variable cost part will be increased with the amount of the total cost, and with the total fixed cost. This ratio depends on the number of students. This first 250,000 does not depend on whether the students are there or not. Okay, that's one. So that's what we now have. If it this way, you first of all up this way. Comes constants. Yes, constant. So the change here is not a vertical. This one here, for the step up cost, the change was vertical. It changes from 101, it steps up from 10,000. Here, it increases gradually. You have the first part, the fixed part, now changes. Maybe something happens. Yeah, that's the person. That's not vertical. Wait, not vertical. So that is what we have in that particular section. Somebody saying that he's not able to get me. Once we are done with the bots, we're getting back to our screen. We're getting back to our screen. We're done with the bots. So somebody saying that I should be able to repeat. I have said the step up cost, the change is a vertical one, right? The step up cost or semi-fixed, the change is a vertical one. I've used Zoom subscription, whereby increasing the students beyond 100 students by just even one makes the cost to increase from 10,000 to 18,000, right? Then we have also looked at the second one where we're talking about the training fee. So the studio, the lease rentals, the computers, the company incurred 250,000. Whether no student is admitted or not, the 250,000 has to be incurred and it is a fixed amount. Then apart from that, any student that is admitted, the training fee will be 2,000. The training fee will be 2,000. So that 2,000 will increase. That 2,000 will increase. That is what we have said. The 2,000 will now depend on the number of students. From this point, I just have a student, 2,000 is incurred. I get 4 students, 4,000 is incurred. I get 6, 12,000, right? That's what we have all the way to. I get 3, 6. I get 4, 8. 5 students, 10,000. So you can see it is now increasing with increased number of students. But at the first part, without any student, we have this particular cost. Remember the cost functional topic number 3, y is equal to a plus b x. So first of all, for us to get total cost, there's this fixed component, this one here, then the variable part that will change with the changes in activity, level. So that is it. I hope we can proceed. Dina, are you now sorted? Dina, are you now sorted? Thank you. That is what we have there. Then let's get to what we call prime cost. Prime cost and marginal cost. We have how many components of prime cost? 3. Can you please list them down there? 3 components of prime cost. Remember, you need that knowledge in topic number 10, in topic number 7. Direct material. That's number 1. Number 2. Number 2, direct material. Number 2, direct labor. Number 3. Number 3. Variable production overhead is not a prime cost component. Hapo umeniangusha. Direct production expenses. It is not direct material, it is not direct labor, but it is a direct production expense. Right? Variable production overheads is added to prime cost to give us something. So what is this marginal cost? Marginal costs. Marginal cost. Components of marginal cost. Let's see. Components of marginal cost. Variable production overheads. Prime cost plus variable production overheads. What else? Prime cost plus variable production overheads. But now, we also have to understand something. Direct material, direct labor, and variable selling and administration. Let's go to topic number 8. That is CVP analysis. For us to get break-even point in units, we said it is total fixed cost plus target profit divided by contribution margin. How are we getting the contribution margin? Actually, it is net contribution margin. How do we get the net contribution? Net contribution is selling price per unit minus all the variable costs per unit. Right? Minus all the variable costs per unit. So all the variable costs are regarded as marginal cost. But now when you go to what you call marginal costing system, under topic number 7, we only bring the variable production cost to form part of the product cost. So, of course, we can give an allowance and say, okay, if you say marginal costs are only the production cost, well and good. But we now know another name of marginal cost is variable costs. And variable cost can be both variable non-production and variable production costs. So, cost database management system. The cost database management system is a computer-based software system that is used in management accounting to manage costs. Highlight 4 benefits of implementing a cost database management system for inventory. In other words, these people are testing a question in management accounting. These people are asking a question on advantages of having proper inventory system. Right? So we have inventory management here, and that is to be done using an automated system. So forget about all these stories. Forget about cost database management, right? I mean, forget about the cost. Forget about used in management accounting to manage cost. What you need to know is, generally, do you have any points with regards to the benefits of a database management system? Now, as you give us now your points, of course, with a system, you are able to enhance security of confidential information. you are able to keep this information for a very long time. There is real-time access to the data. There's increased accuracy, right? You can also initiate what we call the delegation, or actually giving access to what is only needed by a person in that department. There is also possibility of backing up, and therefore you cannot lose this data for the next 50 or even 60 years. Another thing, this data can be collected for research, for reference, to come up with an enhancement of maybe future operations. Now, putting all that together, you are now required to relate your points to, number one, it is a cost database management, okay? Number two, it relates, or it is being used in management accounting. As you give your points to the general system or any system, what you have given me are points for any system that can be put in place. Can you now try to direct them to meet, number one, the cost database management? Number two, can you relate that to management accounting? And number three, what is it managing? It is managing cost. Now, the examiner is being specific by telling you, give 4 benefits of implementing a cost database management system for inventory. What are some of the things that are normally used in managing inventory? Number one, with a system, you cannot leave goods to expire in the warehouse. The system will be able to tell you, you know what, as you go to pick the goods, it sells the ones that are almost expiring fast. Very important in a company that deals with perishable goods, right? That is very important for a company that deals with perishable goods. With that system, you can actually be able to connect your suppliers, and they control your inventory level. So anytime it gets below a given level, what does it do? It notifies the supplier. Then automatically, the supplier brings the product. So you've actually borrowed part of the system to the supplier to manage that. Compare cost of various periods. You can do the comparison. It can be used for training, right? It can be used also to do what we call performance evaluation. Look at how this person was doing this. It has got audit trail. So if anything happens that someone does a mistake in the system, we're able to trace, who is this person? Is this the authorized person to initiate this kind of transaction? So you can see we have more than 4 points to give out. That's why I normally wonder when somebody tells me that we have to start doing our classes from topic number 1, and it is a theory topic. Number 2, identify 5 challenges faced by a business in implementing a cost accounting system. Don't look at a cost accounting system. Put that aside. What we want you to do is, generally, for any system to be implemented, there are so many things that are needed. There are so many challenges. Remember, system makes works to be very, very simple. It reduces this manual work. Everyone is willing to have a system. The only challenge, every business is willing to have a system. The only challenge, number 1, high cost of even acquiring that system. Number 2, even being able to pay someone who can run the system, right? The skilled personnel will be able to run this system requires a lot of salary or payments, and that cannot be managed by tiny businesses, right? The implementation cost, very high. Training your staff to be able to understand how to use that system is another challenge. Resistance from the internal or existing staff is another challenge, right? Lack of support by the developers of this system, or the high cost of running the system. Every time this and this. Then the compliance. The system is not able to keep confidential data for your clients, which cannot be accessed by anyone. So what happens? You will have a lot of cases. Someone has sued the company for data breach and all that. So what happens? The company ends up losing, right? There are systems that normally breaks like almost on a daily basis. Of course, at some point, sometimes back here, even you were also affected. At some point, LMS was a problem. Every time you get to log in, LMS is not working. I think including even today, someone mentioned that, as LMS is misbehaving, kindly share the link for today's class. I saw something of that kind. Once in a while is allowable, but a continuous breakdown brings even a lot of resistance from those who intend to use the system. Yeah, so we have so many. Imagine you are only required to give 5. I've mentioned about 6 or 7. They only need to give 5. Then what else do we have here? Explain the term budget committee. Explain the term budget committee. So under topic number 9, budgetary control, we normally have what we call a budget committee. What are the responsibilities of a budget committee? Or in other words, what is this term budget committee? A committee, of course, you must have at least 2 or 3 people. What are their responsibilities? Maybe they come up with they look at the budgets, the drafts, look at the details of the budget for each department. So maybe head of the departments comes up with a budget for the year. Then it is taken to the budget committee for approval or scrutiny to look at it. Is it something that is realistic? Is it a luxury required by the staff? Something of that kind. And budget monitoring and control. So that's what we have. That is what we have there. Very interesting. So a budget committee is a group of individuals within an organization responsible for overseeing the preparation, number 1, implementation, and monitoring of the organization's budget. The committee typically includes, of course, senior management and department heads who collaborate to ensure that the budget aligns with the organization's financial goals and objectives. Do we have that in Kenya? The budget committee? The budget committee, is it in the National Assembly? Budget committee. So you normally find that every ministry will give their proposal, right? This is what we need to implement in the financial year 2026, 2027, right? All the ministries and all that brings that. And then now the budget committee looks at it and say, no, this one here is too expensive, or the approach is not okay, we are going to drop this. This one is okay, but we can redefine it to be this way, right? Such kind of thing. So the budget committee, right? Yeah, something of that kind. So the roles of the budget committee: coordinating budget preparation, setting budget guidelines, reviewing budget proposals, right? Approving the budget, monitoring budget and implementation, managing budget adjustments. Remember the budget committee in the National Assembly, they look at it, they say, okay, we are going to drop, this was a proposal, but we are going to drop it. This one here, we are going to implement and even give it more allocation and all that. Good. The next thing is, what do we have here in the theory? Now, I highlight 4 arguments for the use of marginal costing. So marginal costing is the costing system whereby only variable costs are forming part of the product cost. The fixed expenses are regarded as non-production cost, and they do not form part of the product cost. Number 1, the advantages, or what are some of the reasons why you support use of marginal costing in doing the costings, right? So number 1, in marginal costing, we learned something at some point here and said, as you make a decision, we normally look at the relevant costs. There's a statement we made, I hope you wrote that down. We said that all variable costs are relevant costs. All fixed costs are irrelevant costs. That is why even from as late as yesterday, when we are looking at, and I just love it, that the examiner tested this question, and up here, they were able to bring this. I love it that way. Actually, that question was to be part of question number 1. It relates clearly to this one here. Remember this question, the way it is, this one here, we have been given what we call the limiting factor analysis concept here. So this limiting factor analysis concept is broad, and as we are doing this, we only focused on the variable costs. The fixed cost was used only when we are required to come up with the resulting net profit. That is when we used the fixed cost. But at the decision-making level, we only used variable costs. Now, can you give us the answer to this question? Can you now give us the answer to this question? The arguments for the use of marginal costing. The fixed costs are already constant. Whether you are going to do production or not, they are constant. They do not depend on the units of output. So as you can minimize the variable cost per unit and maximize on the profit per unit, then possibly you will actually work on the volume or capacity of output, and then you recover the variable costs and even the fixed cost. Arguments for marginal costing system. Simplified decision making, better cost control, since it is normally fixed. A variable, we don't bring in the fixed cost, right? And therefore it helps us to have what we call better cost control. So just know if I produce 10 units, multiply by that variable cost, right? But when you bring fixed cost, we must look at the full capacity of the organization, keeping all the factors at full capacity to know the exact cost per unit. And of course, this one here, or sometimes they can tell you the arguments against. So the arguments against is basically reversing what supports the absorption costing. One of them, it cannot be used when you prepare published financial statements. The evaluation of inventory is done using absorption costing, including the fixed cost. Then facilitates contribution analysis. Yes. In marginal costing system, remember topic number 8? Yes. It is an extension on an application of marginal costing. Topic number 8 is one of the applications of marginal costing system. So it actually facilitates contribution analysis. Flexibility in pricing. Yes. If I want to adjust my prices, I focus on the marginal cost, since the fixed cost will not be dependent on the volume of output. Enhanced decision support for shutdowns. We want to see, should I proceed with this product or I close this department? That is only done by looking at the variable components. That depends on the units. The fixed cost, whether you drop this department or not, it will still be there unless it specifically relates to that department. And then that is what we have. The table below shows the type of cost classification based on an example. Classification based and an example of type of cost. By giving one example in each, fill in the missing letters W, X, Y, and Z. Look at our April 2024 question. Question number 1A. April 2024 question number 1A. You are told to define the cost classification by time and all that, and then you give examples. So in August 2024, the same year, they are now telling you to fill this one here. So look at it. Cost classification and then example of cost. So if I were revising, I could have actually gotten my answers. And I can see somebody got the answers from this part. Somebody was able to revise question 5A, and then we're now addressing question 1A of April. They're able to relate correctly. Now, the cost classification based on time. Examples, sorry, let's start with this first one. The functional classification. So functional classification, you said, we talk about production cost, administrative cost. You can remember that. Then on basis of time, you talked about historical cost, then future cost. Let's move to this part here. We are not given the classification basis, but you have been given variable cost, fixed cost. So which one is X? Which one is X? Somebody is not saying anything. Behavior, right? That is now classification based on behavior. By nature of elements, so that's why I don't talk about the material cost, the labor cost, the overhead cost, right? Good. Then Z, opportunity cost, the sunk cost, how do we call them? How do we call them? Don't be surprised that the examiner will tell you differentiate between discrete cost and sunk cost. How to differentiate between these ones here? Discrete costs and sunk costs. Differentiate the two. Somebody to help us differentiate between discrete cost and sunk costs. Discrete cost and sunk cost. Discrete cost and sunk cost. Discrete cost and sunk cost. So sunk costs are unrecoverable. Discrete costs are made by management decision. So they can decide to. So let's say RCM have decided to sponsor 2 students through their secondary education. RCM is not obligated to actually sponsor secondary students, but should the management deem it fit to actually do that, then it is at their own discretion. They are not obligated to do that. But maybe as part of CSR, they can actually do that, right? Then sunk cost. So sunk cost, you are able to hear that Sakaja is almost giving a project of cooking 1 million chapati, only to realize that this responsibility has now been transferred from Nairobi County to national government. So it is now not under the control of Sakaja, but now national government. So you already went and procured a machine that would enable you to actually cook the 1 million chapati. 1 month down the line, you've realized that this project has been transferred to national government. So you no longer have the opportunity to get the contract of cooking this chapati, right? That cost is recoverable. It is a sunk cost, right? Then opportunity cost, you could have decided to just, okay, there's someone who went to work and said, I'm done with my degree, let me get to do this job. Since I don't have CPA, I cannot be actually employed to do this specific task. So let me just get to this lower level, earn something little as I do my CPA to get promoted. Then someone said, no, I want to get that huge salary very fast. So what do? Let me drop any work and be 100% full-time student, do my studies, do my CPA, so that when I now come back after 3 years, I'll be given that full salary. So look at what you could have been paid at that lower level over the 3 years when you'll be doing over the 3 years as you do your CPA, compare with foregoing that amount for 3 years, clear your CPA, and come back and get double the salary, the opportunity cost. Which one is the value of the foregone alternative? The best foregone alternative. That is what we have. So you can see, even from the 2 consecutive sittings that we have looked at, these questions are normally related. So imagine it is coming in April 2024, August 2025, they are bringing the same thing, but now in a different version. So don't be surprised if that is also done to you in the April sitting. So 2024, again, December sitting. Let's see what is there. 2024 December sitting, management accounting. So define the following types of cost as used in the decision making. Number 1, controllable cost. So of course, the company has got control over this cost here. Actually, it has actually appeared as Roman 2 of question 1A. Define the following types of cost as used in decision making. Controllable cost, then we need to call discretionary cost. You can just see. It is not a secret. We are all able to see how it is actually happening. So of course, the controllable costs are expenses that can be influenced or regulated by a manager within a specified period. Example, direct labor or raw material costs in a manufacturing setup. Then discretionary are expenses that are determined by managerial judgment and decision making rather than being directly tied to a production level. Or for example, you have said you have decided to build a road. Are you, are you getting me now? Confirm that. Are you getting me from the side? Are you getting me from the side? Thank you. So we are saying that joint that in and I you is to give us number 1 kerosene, to give us diesel, to give us this joint. You get the buy and it will give you this an important. It will give you control that is an important major
you able to distinguish between byproduct and joint products from that information? Let me see what somebody is giving us there. Check on your sound, sauti haiko. Give me the difference as I work. Give me the difference as I work on that. The difference. Sauti hakuna. Okay, you will give me a minute to work on it.
Good. So that marks the end of our today's discussion. That marks the end. I hope everyone has got the 100 pages document. All the questions you are doing there, the answers have been provided in the 100 pages document. It is there in the group description where we have the notes, that is theory questions and answers. So this is our last class. This is our last class for this week. This is our last class for this semester. And God willing, based on what we have been doing, this is our last class for this unit. Right? So it means when we now meet on 2nd of May 2026, I should be now teaching you advanced management accounting. I should be now taking you through advanced management accounting evening group. Evening group. That's where we should be meeting, right? Based on what we have been doing, I'm very sure that we'll be meeting at advanced level in advanced management accounting. So please don't let me down. Again, based on what we have been doing, let me just drop this. Based on what we have been doing, I'm very sure that we are not just looking for 50%. No, I'm now targeting something else. I'm looking for the best student, right, in management accounting, April 2026 should come from a May evening class, January, April semester. The best student. If you can be top 3, that's good. Top 3 in the whole country. Top 3. For those who will be doing their management accounting paper this semester, right? I expect from the 77 of us who are in this meeting, top 3 should be coming from this class. At least you should get somebody from this group here. We have done so many things. So we are now not focusing on 50, but we are focusing now on top 3 students in the April sitting, right? Yes. And of course, once you're done with your exams, the exams will be ending on 23rd of April. I'm still waiting for you to submit to me that name, the one person who will be sponsored for advanced Excel. And as I've said, in this unit, you need Excel concept. In this BDA, which is compulsory to all of you, you need Excel concept. So please join us. If you will not be this one student, just put aside 2250. We are giving some discount. Then join the advanced Excel training. Not just advanced Excel. You also need to know how to file returns. So iTax here is very important to you. You also need to go to an interview and say at least you've interacted with accounting packages. So you can also join us for Tally, very important. You can join us for QuickBooks, very important. You can join us for QuickBooks, very, very important. And of course, now the Excel that I've been mentioning all along. All these ones here, you'll only be charged 22.50, 22.50, 22.50. At the end of the training, which will take only 2 weeks, you will be given a certificate. Right? You'll be given a certificate. So if you say at least I've done iTax, I know how to file returns, you can be posted somewhere, right? You know how to deal with accounting packages, then of course you can now be given data entry to do in QuickBooks, right? Something of that kind. So these ones are meant to prepare you for the BDA and even for the life after CPA journey. So you have been great people. You've been great people. I hope you're the best team. I was not having a lot of issues in terms of pardon. There's a team that was full of that. Of course, I will not mention them sometimes back, but this was a great team. The moment I introduced topic number 3 and I was able to see a lot of positive responses, I knew we were to do at most 2 questions per concept. Then you move to another one. There's a team that I had to do like 3 questions per concept, but this was a great team. Sometimes you could even do just 1 question and the concept is done, we move to something else. So I believe that you will deliver. You will deliver for yourselves and even for this group here. So that marks the end of our semester. That marks the end of this class. So thanks for your time. Have a blessed night. Success in your exams. And when we meet in May, we'll now be celebrating. I've passed my paper. I'll just be waiting for pass in that group. Don't exit the group because we still have a lot of things to say there, including giving us feedback on how you performed. Yes, I've passed 3 papers in first attempt. I've done my MA in other colleges, but the moment I did it in RCM in this semester, I finally passed this paper. Those are the messages we'll be waiting for in May, and success in your exams.